It's Andy Bush, economist, and moving my clients from chaos to confidence. I thought I'd pop another video out. Cruising down the highway here, and I thought I'd talk about what the Fed's doing, because they've been on cruise control, and that's what they're telling us that they're going to be for 2020. So I'm going to answer three quick questions. What did the Fed do? What did they tell us about what they're going to do in the future? And what do other people say about what the economy is going to do in 2020? So what the Fed did yesterday is what they do best: nothing. They didn't raise or lower interest rates. They kept them the same, 1.75% overnight Fed funds. So that's a good sign that they really didn't do anything, that they didn't need to do anything. And the second question is, what did they tell us about what they're going to do in the future? Well, they said they're also not going to do anything in the future. They also, Chairman Jay Powell did say during his press conference that they would act if needed, and certainly act if inflation started dropping below their target level. But at this time, they're not anticipating doing anything, so that's what we call pausing in Fed parlance, or what they tell us that they're going to do. So from that standpoint, I think that's okay. Now, what's more interesting in answering question number three is, what are other people telling us about the future, about 2020? Well, let's just talk about this quarter really quickly. So whether it's the New York Federal Reserve's GDP number, or the Atlanta Federal Reserve's GDP number, that's GDP Now or Nowcast, these two numbers say we're going to get growth somewhere between 0.75 percentage point to 1.5% for the fourth quarter. That's not great growth. That's pretty slow, and it's a lot slower from where we've been. So that leads to a lot of other people out there worrying about whether or not we're going to slip into a recession. Now, what's interesting about that is that it's really hard to do with unemployment at 3.6% or 3.5%, really low levels. But that's not what people are talking about. Many of the surveys that we see of CEOs and other people that are involved in business and FIBs as well, they're looking out into 2020 and saying, there's a rising risk of a recession. Now, these surveys don't have a great track record, but what they do in the sense of telling us something interesting is that if more people decided that they believe that and go along with it, then you begin to have a change in perception, and certainly a change in confidence about what the future can hold. And why is that important? Because then that changes behavior. And since I'm a behavioral economist, or a narrative economist, that's important in the sense that we get concerned about people changing behavior, and certainly starting to reduce down what they're going to do or expect to do in 2020. If they begin to raise cash levels or not invest in capital expenditures, then it's almost a self-fulfilling prophecy when it comes to these surveys. So that's really why we want to keep an eye on that. All right, that's enough for me right now, traveling down the highway, switching lanes, going 80 miles an hour, maybe not that fast, but just wanted to pop that out for the economy, for interest rates, and for the Federal Reserve, of what they said yesterday. Thanks again.